Joining us now, Paul McCarthy, president at Kisco Capital, and Melissa Otto, head of Visible Alpha Research at S&P Global Market Intelligence. Great to have you both on. Melissa, let's start with you. I mean, we've got good numbers here. They beat on earnings. They beat on revenue. They raised their outlook here. The stock is down more than 8%, close to 9% right now. What is driving so much move to the downside here?
Hi, thanks for having me on. A couple of things going on with Cisco. First and foremost, they did have a good quarter, beat Visible Alpha consensus in their segments, as you mentioned, around networking and security. Their guidance was good, also beat consensus. But the issue really, I think, seems to be around their gross margin and the way that they guided. And the gross margin came in a bit light of expectations. The second thing is that the stock's had a good run, and it does trade at a pretty rich multiple. So there may be a bit of sell the news in this.
And Paul, how are you looking at the significance of that pressure on the gross margins, particularly as Cisco is ramping up its AI infrastructure? Is this everything was priced to perfection reaction because we've seen Cisco gain more than 60% year over year? Or are there real fundamental concerns here?
I don't think there's any real fundamental concerns. I think, in the company's call, they alluded to CapEx spend might affect their margins. Maybe there's a risk they don't convert their pipeline into cash. I think that's probably a low probability. I think what we're seeing now, the stock is really very technical. I mean, we had a very good run up to 130, and there was an extreme overbought condition. If you look at the relative strength index, and I think that what we're seeing is just some consolidation, working off an overbought condition. Maybe we dip down below the July low of like 107, 108. But I think that, seeing a stock get overbought and then consolidate, there's always a concern after a big run up that it just collapses and rolls over. But I think the stock's holding up pretty well given how much it's run up this year. So I really just see this as part of a normal consolidation period. And, it's a very bullish chart. What we heard from the company was very bullish. I think that they were being a bit conservative in their, outlook for the next few quarters. It wouldn't surprise me to see them do better than they're projecting right now. But I think over the next 6 months, you'll probably see a new high in the stock. But this is definitely a bullish condition for sure. We're just in a consolidation period right now.
All right, Melissa, let's look at some of that growth here. They had $9.3 billion in hyperscaler AI infrastructure orders in the quarter. They're now projecting for revenue in terms of AI infrastructure to rise from $4 billion in fiscal 26 to $7.5 in 27. How much confidence do you have in that conversion from orders to revenue?
This seems to be the million-dollar question, not just with Cisco, but with many companies, the conversion. I think given the trajectory of AI growth and the pace that this is all unfolding into the market, they do seem well positioned. I think as we look forward and think about how they're investing their cash and how they're ultimately investing in the business, there's going to be this question that comes up about what are the returns and how are they delivering on AI growth in a way that's going to really deliver shareholder value. And I think, this is maybe what investors are, some of the more bearish investors are really looking for some evidence, something to hang their head on around this.
And Paul, how concerned are you about NVIDIA here moving further up the networking stack? Could their integrated AI networking offering now eventually put some pressure on Cisco's opportunity?
Yeah, I mean, they compete with Arista, NVIDIA, Juniper, Dell. So there's competition out there. I mean, recently they did mention that they just won 3 new hyperscale AI infrastructure design wins. And so they're showing success. The CEO on the call last night mentioned that about 6 years ago, they started to really emphasize getting better relationships with hyperscalers. So this isn't just something that fell into their lap and they're scrambling to catch up and deliver. They've actually been working on this for some time. And they're also seeing, a broadening base beyond hyperscalers. I think the non-hyperscaler AI orders were about 1.3 billion, which is up roughly 150% year over year. So that's a good sign too. that they're competing not just with hyperscalers, that they're trying to build out a broader base of customers. So, I really do think they've been working for some time to deliver on this, and it's really just about management executing at this point. That's what I think the biggest risk is.
Well, those Q4 results, revenue coming in at $17.3 billion on EPS of $1.22, but again, falling slightly on some concerns over those margins, down about almost 9% right now. Really want to thank you, Paul McCarthy, for being with us today, President at Kisco Capital, and Melissa Otto, Head of Visible Alpha Research at S&P Global Market Intelligence.